Many of you have asked me about my opinion on Hershey's stock, if I believe Hershey is an amazing buying opportunity or not. It's down over 30% over the last year. I did a video on it 8 months ago. I was bearish on it, but a lot of things have changed. And in this video, I'm going to update you on my thesis and tell you if Hershey is a good buying opportunity or not, as it's a very popular stock amongst retail investors, especially dividend investors on Twitter. They've been buying Hershey's a lot recently. But for Hershey, I mean, a lot of you are familiar with the name or with the brand that they own, Kit Kat and many others. I don't really have to make an introduction, but it's a very well-known company in the United States and outside the United States with many different popular brands. They've been growing multi-billion-dollar brands. It's a pretty good company. And this company does sell, chocolate. And it's been suffering from some commodity prices like cocoa. Cocoa has been challenging for a lot of these companies. Even Starbucks has been challenging for Starbucks because cocoa just absolutely skyrocketed and it's starting to come down. And this is good news for Hershey. Same thing with sugar. Sugar has skyrocketed too. It's been coming down. All that stuff has been affecting companies like Hershey. And as these commodity prices start to come back to earth, it's going to help them. It's going to help them a lot on cost because they do have a lot of hedges, of course, but I mean, it's still going to help them a lot. But for the last earnings report, it was a very good report. I mean, I was shocked. 8.9% in sales. In terms of constant currency, 8.6%. Net income up 36.5% on per share basis. I mean, that's pretty good. Pretty good stuff. It was a very good quarter. But in terms of the outlook is very bad because they don't expect this massive growth to continue. They expect net sales growth to be 2 to 3% growth, almost nothing. Earnings per share, 0% for 2024. It's going to be 0% for 2024, and it's like 2 or 3% for 2025 before it ultimately rebounds. It's facing a lot of near-term challenges, and it's not going to improve anytime soon. This is the way it is with Hershey's. This is why the stock is down 30% over the last 5 years. The S&P is trading at all-time high, and Hershey is down 30%. But the company is making a lot of investments for the long term. So it's going to drive more efficiency, like a lot of stuff in automation. It's going to save them over $300 million by 2026 and beyond. I mean, this is very good. It's pretty good stuff. A lot of companies have been investing in that stuff, and it's more efficient. But if you look at the debt, the company does have a lot of debt, of course, but it's very manageable. I mean, I'm not worried. I mean, Hershey can refinance same way Pepsi could and Coke. A lot of people always bring me the balance sheet of these companies. And yes, they have bad balance sheet, but they have good credit rating and good free cash flows. They could always refinance. So it's not really a big problem with Hershey. And it's about $300 million a year, for 2050. So it's not much. I think they can manage it. But if you look at the opportunity with Hershey's, why are people buying Hershey's? Because if you look at the PE ratio, it's trading at 19 times forward earnings. The mean was 22 times over the last 10 years. And if you look at this level, it was pretty much where it was trading at in COVID, in the March 2020 crash, and in January of 2018. Now, this has historically been a pretty good level to buy Hershey's. The lowest it went at was 16.4, and now it's trading at 19 times earnings. So it looks like a pretty good level to buy the dip and dollar cost average down when commodity price start to come back to earth and you have demand that's going to start to improve after this year or early next year. Hershey is going to go back up again, and it looks like a pretty good opportunity. And I agree, but I also disagree. I'm going to tell you how. By 19 times earnings is a pretty good price for a company like Hershey's with brands and with pricing power, trading below 22 times earnings on the mean. This is very good. For EPS, earnings per share growth, not much is expected, as I told you, 0% for 2024, around 1% for 2025, then it rebounds to 8%. But I'm not sure if I want to believe that, because I saw the same setups with different stocks and it never happened. I don't really believe they could go from 0 back to 8% by 2026. I mean, maybe, but this is 2 years of almost nothing, and it's not really good. I mean, I don't really like it. And if you look at their own long-term outlook, they have 6 to 8% earnings per share growth. So it's nothing crazy, but 6 to 8%. So let's say on the high end, if they were able to get 8% after 2025, which is very speculative. They're not getting 8% right now. They're going to get it in 2026. Speculative. Okay. Now let's assume they could get the 8%. Okay, that's 8% earnings per share growth. And the 3% dividend, this is like an 11% annual return, excluding a multiple expansion from 19 back to 22. This is maybe 12 to 13% annual return. But for me, Hershey's is still not a buy. And I'm going to tell you why. If I look at Hershey's and I look at how much Hershey's could return, I look at Pepsi. Pepsi is offering me the same return. 19 times, Pepsi is at 20 times. But Pepsi right now is growing earnings per share 8%. It is going to continue growing earnings per share 8% every single year for the next 4 to 5 years. And their guidance is a high single digit growth. So 8%. They've been doing 8%, actually a little bit more, and they can continue to do 8%. Hershey's is offering me a 3% dividend. Pepsi is offering me a 3% dividend too. And I believe Pepsi is more diversified and Pepsi is more recession resistant and Pepsi has more pricing power than Hershey's does. So if I could buy Pepsi at almost the same multiple, why would I be buying Hershey's at this price? This is why Hershey's to me did not make sense 8 months ago. And it still doesn't make sense. And if you do like it, if you're very diversified, you want to own Pepsi and Hershey's, that's fine. I mean, there's nothing wrong with it. But I'm not seeing much beyond a 11 or 12% return. And the difference between Pepsi and Hershey's is Pepsi is growing 8% right now, while Hershey's is not going to grow 8% before 2026, and both of them are valued the same way. So for me, Hershey's right now is not bad. I mean, it's a pretty decent opportunity, I have to say. But if it was trading at 16 times earnings and Pepsi was trading at 19 times, I would pick Hershey's. But for them being at the both same multiple, and for me not being diversified, I would choose Pepsi over Hershey's or maybe another kind of company. But this is just my opinion on Hershey and what I'm seeing with the brand in general, just my honest opinion, not financial advice. So thank you again for watching this video. I really hope you enjoy it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.